Hi there, welcome to this week midweek market analysis. Welcome back to the new year as well. I think things are starting to roll off a little bit more actively starting this week. And this coming week on Thursday, which is tomorrow, we do have the CPI year-on-year data from the US coming in. So that's definitely a very important piece of information that will likely create some volatility in the dollar-related instruments. So looking at the dollar index to get started for today's video over here. Okay, last week NFP did send the dollar down, and at this moment what we're seeing is an impulsive drop. Following that, what it seems like developing itself now is a corrective structure. So we'll give it some more time today as well as going into tomorrow just before the CPI data release. If we can get a decent corrective structure that is looking more of like this, okay, below that 103.40, there's a good potential setup for more downside, which means that if you're looking at the dollar index chart, we can potentially ride on the news to give us that volatility for a potential break to the downside, right? But of course, we will never know what where the market will move, right, when the news release. So what you can do is you can utilize a breakout technique to get involved in it, which means if you get a corrective structure, look for a decent low to put your breakout entry for potential sell, and then if the market indeed move lower as the news release, then that would be an opportunity to get involved in the sell on the dollar index chart. And then next up we have the dollar yen. Now dollar yen is clearer on a lower time frame H1. So we can see over here from this structure we have this top formation, double top, impulsive move to the downside. Right now the market seems to be developing as a three-way flag, which is a pretty decent setup. Okay, and of course we can also combine this with the CPI coming in tomorrow, right, as potential news trade. So what you want to look out for from today to tomorrow, just before the CPI, is to see and observe if the market can continue to push a little bit higher, but more importantly, it needs to go up in a very slow and corrective manner. Okay, it does not necessarily need to come to that 50% Fibonacci level at 133. It can come close to it. It doesn't really need to tag it. But the whole idea is if you can get a corrective structure that looks very slow like this, we have a 1, 2, 3, and this pattern here would essentially be completed, and from there on we can look for a reversal back towards 129.50. that opens up a potential sell trade on the dollar yen. So one way to look out for it is give it some time until tomorrow, just before the CPI. You know, if this is going to develop correctively, you're going to have a potential low, and you can then use that as a breakout entry setup as well. Okay, so of course tomorrow morning, okay, before the CPI release, we'll also update you guys in some of this market development in your daily report. Okay, so over here anyway, you just keep an eye on it. Cool. So this is on the dollar yen. Keep an eye on the downside. Okay, look out for how the market's going to develop on the shorter time frame.